Start the recording. Wait a minute. This damn thing's printing. I didn't have it in save mode. You got to change it when you. Okay, are we ready to start?
You're rolling, Gene.
Okay, before we start, I want to lay down a few ground rules. I don't want anybody giving this information out to anybody. And I have two reasons for doing that. I don't want people using this because they don't know how to use it. And if somebody uses this and they do it wrong, they're going to screw it up for everybody. And the IRS you won't be able to do anything. They'll stop anybody from using it. And I don't want that to happen. Is there anybody, if I find out you're giving this stuff out to somebody, I will ban you from the class. I don't want anybody giving this out to anybody that's not in the class. If I find out you're doing it, you're going to be kicked out of the class. Is there anybody that doesn't understand that? You got too much of this going on. Everybody's passing information around to people, and people go out there and use this stuff. They don't know what they're doing, and they get into trouble, and they create problems, and then the IRS steps in and bans it, and it won't let anybody do it.
I think, Gene, perhaps we should reiterate the fact that this isn't a cut and paste training. None of Gene's trainings are cut and paste. You got to learn the material, study it, and then apply it. This isn't like you take a document and you throw information in it and then you send it. Because somewhere along the line, someone's going to start to question you. They're going to find out you're full of shit, and you don't know what you're doing, and then they're going to come after you, and then you're going to be screwed. So this isn't one of those other so-called gurus out there who's going to give you a document and say fill it out and then go send it. If anyone's going to do that, you better leave class now and get a refund. Leave right now and just tell me you want a refund. I'll send it to you. Because it's not going to work that way. This takes effort. And that's what Gene's trying to tell you. One of the things he's trying to tell you. Everyone should have signed the disclosure agreement. I haven't had a chance to cover them all, but I am going to do that. Make sure everyone signed one. And if you haven't, then I'll make sure you do. I'll forward the information to you.
Right. This is stuff that even the IRS doesn't know this stuff. I know that sounds obtruse, but that's the truth. I've talked to the liaison committee for the IRS, the head of it. They don't know anything about Class 5 gift and estate taxes. That's classified information. It says right on the manual for official use only. So the public is not supposed to know this stuff. So you got to keep this stuff under your hat. I probably shouldn't even be teaching this. but it's, you know, this is how we change the system. This is how you get all your money back, and it's the only way. And nobody in the public domain is doing this because they don't know it. And you don't know it because they don't read anything. I haven't found anybody that reads anything. So is there any questions about what I've said? I don't want this being given out to people because people don't know what it is. And I don't want somebody using it that doesn't know what they're doing. And believe me, when I get into this, you're going to see why. People don't know what's going on. They're all filing 1040 tax returns, claiming their wages as income. You're not supposed to be filing those forms. And they've got everybody doing it. They've been doing it since the early 1900s, 1930s. So if there's any questions about it, now's the time to bring it up. If you don't have any questions, I'm going to start getting into this. Okay, everything since 1933 is a Class 5 gift and estate tax, which is Chapter 11 and Chapter 12 of Title 26. And when you get into the estate side, I'm going to show you this document. And I can give you this as a handout if I haven't already done it. Now you can see this is an official document of the IRS. This is not something I made up. This is theirs. And Virginia, are you here?
Yes, I'm here, Gene.
Okay, go ahead and read this paragraph right here.
Most relatively simple estates, cash, publicly traded securities, small amounts of other easily valued assets, and no special deductions or elections or jointly held property, do not require the filing of an estate tax return. A filing is required for estates with combined gross assets and prior taxable gifts exceeding $1,500,000 in 2004 and 5, $2 million in 2006 through 2008, $3,500,000 for decedents dying in 2009, and $5,000 for more for decedents dying in 2010 and 11. Note.
No, that's $5 million.
$5 million, I'm sorry, thank you. Note, there are special rules for decedents dying in 2010, 5,120,000 in 2012, 5,250,000 in 2013, 5,340,000 in 2014, 5,430,000 in 2015, 5,450,000 in 2016, and 5,490,000 in 2017.
So you have a tax credit of $5,490,000. That means that's how much money is in your estate. A tax credit is just like money. They give you that amount of credit before you are required to file. And I know that there's nobody on this call that's making over $5.5 million. Okay, that's number one. Okay, does anybody have any questions about that?
I have a question.
Go ahead.
Okay, so I thought that this is, it says in that paragraph, it says for decedents dying. So I thought that this gift
That's
tax?
based on a presumption of death. Every probate code, California has, every state has adopted the Presumption of Death Act. If you've been missing, and it comes under the doctrine of missing person, if you've been missing in California, it's 5 years. If you've been missing or haven't been heard from for over 5 years, then you're presumed to be dead.
Okay, so how do they presume that, say, for instance, I'm dead? Like, so what's,
Well, if you don't claim your estate, or if they don't hear from you for summary administration of the estate, the presumption is that you have departed or abandoned the estate, which is what the word decedent means.
okay, so I know that.
Now, if you read the IRS manual, it says that a decedent is a minor, trustor, grantor, and owner of the trust estate without a Social Security number. A decedent doesn't have a Social Security number. So if you want to identify yourself as a person that's not dead, use your Social Security number. Nobody reads anything. If I've learned anything in my years of existence, is that nobody reads anything. And that's not my opinion. I took a reading comprehension test. I got a 12 on it. The guy says, you got a 12. And I said, so what? He says, well, we've been testing people for 50 years. We're talking about millions of people in 50 years. Adult males over the age of 50. I said, well, what's the average score? He says, a 5 or 6. I said, what is that? He says, grammar school reading comprehension. The average adult male, 50 years or older, has a grammar school reading comprehension. And that's not me saying that. This is a business entity that tests people for reading comprehension. And he didn't say my score was exceptional. And what he told me was that I'm the rule, not the exception. And so he told me that I am normal. There was nothing exceptional about my score. He came right out and told me that I'm the only normal person they've tested in 50 years. What does that tell you? It tells you that people can't read. You got two classes of people, the people that don't read and the people that read but they don't comprehend what they're reading. Thus the reason for the reading comprehension test. That's why they gave me the test, to see how my reading comprehension was. Well, I got a normal score. There's nothing exceptional about the score, but I'm the only normal person they've tested in 50 years. So when he told me that, I knew what the problem is. People can't read. And when they do read, they don't understand what they're reading. Corporations. You see here in this publication, this actually comes from publication 950, which tells you that you have a unified tax credit on the gift side and a unified tax credit on the estate side. Well, on the estate side, as of 2017, is $5,490,000 before you have to start paying taxes. So you have a tax credit or exclusion. And if you know anything about corporations, corporations use their unified tax credit as money. They borrow money on that. So if you have, and I can show you in the IRS code where it says that if you have a tax credit and you don't use it, it's abandoned property. And all these corporations are using it. So you have a $5,490,000 tax credit as of 2017. If you don't claim that, then corporations use that. And that's why they don't pay any income tax. And so what they do is they bill you for the tax. So all the bills that you're receiving, utility bills, and I don't care what they are, water, gas, electric, credit cards, mortgages. I mean, how many mortgages, residential mortgages, do you see with a $5,490,000 loan? What they're charging you for is the tax on the loan. What was the loan? It was a conduit loan, which means that the servicing company borrowed money from investors on a pay forward. Now, the word REMIC means real estate mortgage investment conduit. It's a conduit loan. Investors deposit capital into a trust fund, which is called a REMIC. Then they loan the capital to the servicing company. Then the servicing company takes out a fake loan with the homeowner and forwards his mortgage payments to investors as cash flow claims. If you were in the class last week, I showed you on the PIMCO bond website. In fact, it's in my appellate brief that I filed in the appellate court, where PIMCO bonds, which is the U.S. arm of Allianz SE, forwards mortgage payments to investors as cash flow claims. So you're not paying for a mortgage, you're making payments on an investment contract to investors. It has nothing to do with the mortgage. If you want me to show you that, I can show it to you right now. In fact, it's in my appellate brief. I copied it and put it in there. And the appellate court ruled that Bank 1NA did not have standing to foreclose on the property. That's the document where I did an express trust and made all the judges trustees. Now, if you read 2041 of Title 26, if you're a grantor, you have the power of appointment. And that means that under the Power of Appointment Act, you can appoint public officials as trustees. So I made all these judges trustees. Now, if I make them a trustee, what do they have to do? They have to pay all the taxes. If they do a taxable termination, a taxable transfer, a distribution, or sale of my estate property, they have to pay the taxes on it, because they're acting as a trustee, an administrator, or an executor. And if you read 2002 of Title 26, it says the executor has to pay the taxes. You want me to show you where it says that? It's in 26 U.S.C. 2002. The executor or the administrator is defined, and I think it's 2203, is defined as the person who has actual or constructive custody of the estate property. So all these people are using your estate because they're all bankrupt. And what do I mean by bankrupt? There is no money. And if you look up Mortmain, which is where all this came from, it comes from the Norman Conquest of 1066. It means dead hand. Mortmain means dead hand. Mortgage means dead pledge. So any corporation, company, or association who is insolvent or bankrupt is legally and naturally dead. And that's not me saying that. I can show you 5 Supreme Court decisions that say that. So everybody on the public side is bankrupt. So how the hell can a bankrupt company, association, or corporation loan they're an insolvent. Well, the answer is they can't. So what's really going on here? That's why if you read the deed of trust, and I can show you the deed of trust. If you want me to show you, here, I'll show you this is my brother's, and I'm getting a jury trial. You show me anybody that's got a jury trial on a foreclosure case. I'm getting a jury trial on a foreclosure case. Show me anybody. That's how serious this is. That's because I know how to argue the issues. I'll show you something. I converted this to a Word document so I could do a copy and paste on it. Nobody raised anything. See this E number right here? Can everybody see the screen?
We can see it, Gene.
Okay, let me blow this up a little bit. Okay, if you can see this, this is the escrow number. This is the account number. It's not a loan number, it's an account number. So I put E500-63342. So we go down here. So here's the borrower. That's my brother, John F. Keating, December 18, 2006. The trustee is Recon Trust Company, N.A., at 225 West Hill Street Drive, Thousand Oaks, California. They haven't been in business since the early 1900s. Mears hasn't been in business since 1998. So you got a deed with a trustee that hasn't been in business since the early 1900s. Mears has been out of business since 1998. I have all the documentation. Now notice what this says. Go ahead and read this, Virginia. Paragraph F. That should be note.
Note means the promissory note signed by borrower and dated December 18, 2006. The note states that the borrower owes the lender $285,000 plus interest. You want me to keep reading?
Well, you left out the most important part.
The dollars, U.S. dollars, $285,000.
Okay, what does U.S. mean? What did I tell you? U.S.
Units of silver.
Yep,
Right.
units of silver.
Now let me ask you a question. Did they loan you units of silver?
No.
Then they didn't give you a loan, did they?
No.
Plus interest. Now it goes on to say, now read borrower has what?
Borrower has promised to pay this debt in regular periodic payments and to pay the debt in full not later than January 1st, 2037.
Okay, if you add 30 to December 18th, that's a 30-year. In other words, the debt's not payable in 30 years. You pay the debt in full, not later than January 1st, 2037. Now, you know what that means? That means that it's not payable until maturity. Well, if a note isn't payable until maturity, it's a security, not a note. Now, in 2037, we're going to be back under lawful money. So let me ask you a question. How can they foreclose on the property if they, number one, didn't loan you units of silver and it's payable at maturity, which is 2037, so it's not in default. So how can they foreclose on property when the loan was never in default? Because it's not payable until 2037. That's 30 years from December 18, 2006, for those of you that can't count.
Gene, this is Eric. I have a question. Okay, when Virginia read that statement, Virginia, will you read that statement again? I can't see it.
Can you see my screen?
Yeah, but the print is way too small.
Well, you want me to blow it up? Let me blow it up. Let me blow this up. Can you read that? Can you see that, Eric?
That's a little too big, Gene. It's not quite fitting in the...
Well, yeah, but you can see the 285,000, can't you?
Oh, yeah. He can see it.
I'm blowing it up so he can read it.
He can see it.
Okay, Eric, can you see this? Eric? Control the Eric.
I got kicked off. I got kicked off. I don't know what happened. But I got kicked off.
Well, okay. Can you read? Can you see what I'm showing you on the screen?
Barely.
Well, that's as big as I can make it without.
Right. But my question is, when Virginia read that statement, she says, it sounded like she said that the payments were due in equal installments up until 2037. Is that true?
But it doesn't talk about this last sentence here. Doesn't talk about installments. It says pay the debt in full, not later than January 1st, 2037.
Okay, got you. All right, that's the discrepancy that I had. Okay.
So it doesn't say in equal monthly payments. It doesn't say anything about that. It says I can pay the debt in full not later than January 1st, 2037. So how the hell can it be in default if I can pay it in full on January 1st, 2037?
Gotcha.
Call from total free call.
Well, you can
Call
see.
from total free call.
But that's what I wanted to show you.
Call from total free call.
And as long as we're on the subject, I'm going to show you something else that nobody brings up. Notice this says, Eric, listen, read this, Virginia.
Okay, it says borrower covenants that borrower is lawfully seized of the estate hereby conveyed and has the right to grant and convey the property, and that the property is unencumbered, except for encumbrances of record. Borrow warrant 5, and will defend generally the title to the property against all claims and demands. Subject 10, any encumbrances of record.
Okay, here, I'm just pointing these things out to prove my point. Okay, it says the borrower covenants that borrower is lawfully sized. Who can tell me what lawfully sized means? Anybody?
That you already own the property?
Right. Well, if you already own the property, why are you taking out a loan to purchase it if you already own it? Hello. Hello,
Correct.
hello.
Correct. You're right, Gene. I didn't understand the last question. I had a little problem with my connection. But you're right. Why would you take a loan out if you already own the home?
Okay, let's say for the sake of argument that you don't own it. Then how can you convey and transfer right title and interest in the property to the lender if you don't own it?
So title transfers at acceptance, correct?
No, what you're doing is transferring title. Adam Levinson says technically it's a sale and repurchase agreement. So if I'm selling the property to the lender, he becomes the owner, the buyer, and I'm the seller. And if you read the preliminary change of title and ownership form in California, it's 502A, they have to pay a 3% under 480.03 of the Revenue and Taxation Code of California. They have to pay a 3% capital transfer tax for the change of title and ownership. They never do that. You can't show me one state where they've ever paid a capital transfer tax on the change of title and ownership. So how the hell can a bank foreclose on a property where he didn't loan you any money because there is none, and he didn't have title and ownership of the property at closing? Now you know why I got a 12 on a reading comprehension test.
Mm-hmm.
So if the borrower already owns the property, and this says that he does, how can you convey something? Let me ask you a question. Can I sell you or transfer my car to you if I don't own the car? Can I?
Of course not.
Can I? Well, yeah.
No.
Yeah. It's true. Well, of course not. Well, then how the hell are they getting away with this? And how come nobody brings this up in a foreclosure case?
Because they don't know, and the bank is in the holder in due course.
Right. Well, that I'm just pointing out the. Let me show you something else.
Can I ask a question regarding the last question?
Well, let me finish this first. Borrower irrevocably grants and conveys to trustee and trust with power of sale. Let me tell you something. You see what that says? Can everybody see that? Borrower
Irrevocably. Irrevocably, yep.
That's a power of attorney. That's a confessed judgment. You know what a confessed judgment is? It's a cognobit note. That means they can sell your property without filing a complaint in court. That's why California is a non-judicial state. They're not a non-judicial state. In fact, 2924 of the California Civil Code says that the trustee cannot exercise the power of sale except by a decree, judgment, or order from a court of record. Well, what's the order or judgment from the court of record? It's a confessed judgment. When you give somebody power of sale, that's a confessed judgment. Now, if you want me to show it to you, I will. 1131 to 1134 of the CCP says that they have to file an affidavit with the county clerk's office, signed by the homeowner and by the attorney. Then they have to record it with the county clerk's office. Then they have to record it with the clerk of court before they can foreclose on the property. You show me one case where they've done that. Here, let me show you. I'm not making this stuff up.
If anybody has any questions, please post them in the chat so they can be read.
Everybody tells me it's a non-judicial state. It's not a non-judicial state. It's a judicial state. They have to have a court order of judgment in order to foreclose on the property. Okay, here it is. 1132. Go ahead, Virginia, and read that.
1132, entry of judgment. Obligations for which judgment may be confessed. Conditions. Effective January 1st, 2003. Currentness. A judgment by confession may be entered without action either for money due or to become due, or to secure any person against contingent liability on behalf of the defendant, or both, in the manner prescribed by this chapter. Such judgment may be entered in any superior court. B. A judgment by confession shall be entered only if an attorney independently representing the defendant signs a certificate that the attorney has examined the proposed judgment and has advised the defendant with respect to the waiver of rights and defenses under the confession of judgment procedure, and has advised the defendant to utilize the confession of judgment procedure. The certificate shall be filed with the filing of the statement required by Section 1133.
Okay, now we'll go down to 1133. There's a statement in writing. Read it.
1133, defendant's written statement form, currentness. A statement in writing must be made, signed by the defendant, and verified by his oath to the following effect. 1. It must authorize the entry of judgment for a specified sum. 2. If it be for money due or to become due, it must state concisely the facts out of which it arose and show that the sum confessed therefore is justly due or to become due. Number 3. If it be for the purpose of securing the plaintiff against a contingent liability, it must state concisely the facts constituting the liability and show that the sum confessed therefore does not exceed the same.
You show me one foreclosure case where they've done that. Okay, here's 1134. Read this.
1134, defendant's written statement. Filing, entry of judgment, costs, judgment roll. Effective January 1st, 2006. Currentness. A. The statement required by Section 1133 shall be filed with the clerk of the court in which the judgment is to be entered, who must endorse upon it and enter a judgment of the court for the amount confessed with the cost provided in subdivision B. B. At the time of filing, the plaintiff shall pay as court costs shall become part of a judgment. The fee is provided in subdivision B of Section 70626 of the Government Code. No fee shall be collected from the defendant. And C, the statement and affidavit with the judgment endorsed thereon, together with the certificate filed pursuant to Section 1132, becomes the judgment roll.
Show me any foreclosure case ever in the history of this planet where they've done that.
Never.
Huh? You tell me what's wrong with this picture. This is updated. This is as of 2017. Okay, if you were in one of my earlier classes, under the international, you need to write this down and remember it. Under the International Bills of Exchange Act. In fact, I'm going to show it to you so you can see it for your own eyes. Because you're not going to believe it unless you read it for yourself. I keep getting this. Okay, here it is. Okay, Virginia, read this. 176 on down.
Okay. 176. 1. A promissory note is an unconditional promise in writing made by one person to another, signed by the maker, engaging to pay on demand or at a fixed or determinable future time a sum certain in money, to or to do the order of a specified person or to bearer. What is said to be an unconditional promise to pay a sum certain in money is itself money. The words on the
Say that again. Repeat what you just read.
What is said to be an unconditional promise to pay a sum certain in money is itself money. So the promise to pay is itself money.
Right.
Is itself money.
So if you transfer that to somebody, you transferred money. You made a payment to them.
Mm-hmm.
Finish reading it.
The words on the face of the paper money, "will pay to the bearer on demand," cannot alter its character as money and turn it into a different document which calls for the payment of money.
In other words, a note, a promise to pay, isn't a document that calls for the payment of money. It is money itself. Isn't that what that says? So this is the Canadian Supreme Court saying this. And this is Canada is a U.S. corporation. So this case applies in the United States. I can show you on the SEC website where Canada is a U.S. corporation. So when you sign a promissory note, it's money. And when they transfer it to somebody under the law merchant, you're making a payment. Because the promise to pay is money. It says right there, it doesn't call for the payment of money. It is money.
So Gene, that one sentence, what is said to be an unconditional promise to pay a sum certain in money is itself money, basically says that it's the intention of the transferor and the transferee accepting whatever paper as money, and that in itself is the money.
Right. That pays for the house. You made a payment to them, but you never demand. Now here's why you're not getting a remedy.
Gene, we have a couple people asking if you're going to cover how to pay bills. You said you mentioned on the call with Angela Stark.
Yeah, we're going to get into that. Okay, read number 2. Now this is 3-501 of the Uniform Commercial Code.
Number 2, upon demand of the person to whom presentment is made, the person making the presentment must I. Exhibit the instrument, II. Give reasonable identification and, if presentment is made on behalf of another person, reasonable evidence of authority to do so, and III. Sign a receipt on the instrument for any payment made or surrender the instrument in full payment is made.
Okay, whoever asked them for a receipt for the payment that was made at closing, because the promissory note is money. Isn't that what it says?
Yeah, nobody asked
So
for
they
it.
have to give you a receipt or surrender the instrument if payment is in full. How many of you have ever asked for surrender of the instrument?
Nobody asked, Gene.
Now you know why I got a 12 on a reading comprehension test.
Hey, Gene, what is the proper endorsement on the back of a note? Just your name?
Yeah, you can endorse it, but once you transfer it to somebody, it constitutes a payment. It discharges the original drawer and maker. They do pay to the order of without recourse. Well, what is without recourse? That's a waiver of right to payment.
Wow.
You can't come after the original drawer because it was endorsed without recourse. Without recourse means it's a non-recourse instrument. You have no recourse to get payment. Now, how are you going to transfer that to a REMIC if it's endorsed without recourse? How's anybody going to get paid? If I write you a check and endorse it without recourse and you accept it, you cannot come after me if the check bounces. Wow. Anybody got any questions?
Well, I do.
Yeah,
So
go ahead.
go ahead.
Okay, Gene, this is Eric. I have a question. On the back of a note, let's say if you use a note to pay, a bill, on the back of the note, we don't endorse it. We allow the person you're submitting it to for payment to endorse it, right? So they can deposit it.
Right. Unless you're transferring the note, and you insert them, if you transfer it to them, which is what they do, you gave them the note. They cannot materially alter the note. They altered the note. It's no longer a liability instrument.
Right, I understand that. But what I'm asking you is, let's say if I do a promissory note to say pay off a mortgage or something, when I do the note on pay to the order of whoever who's alleging the loan, the debtor, then do I turn the note over and endorse it on the back, or do I allow them to do it?
Well, you don't have to endorse it if you're transferring it to them.
Okay.
But if it's the note itself, the promise to pay is money. So if you give somebody the note, you're giving them money.
Exactly.
It doesn't have to be endorsed.
Right, that's what I'm saying.
Well, you didn't ask for the note back.
Gene
You
just
didn't ask for I can show you a Florida case where a woman gave a note to a guy she borrowed money from. She paid the loan off and never demanded the note back. The guy took the note and gave it to a bank for another loan, and she became liable for it. He went into default on the loan, and the court said that she was liable because she didn't demand the surrender of the note. Now take that and apply it to here, and you've got why you guys aren't getting a remedy. Is there anybody that doesn't understand that?
Gene, I do have, okay, what I'm not understanding, okay, you said that's why people aren't getting remedy. I mean, you send out a note, for example, and pay a bill, and they keep the note and they don't send any receipt, and you go back and forth. They keep telling you that they can't accept the promissory note. They don't give you remedy. So I guess you have to do.
Did you ever get a protest or not acceptance?
Yes.
By a notary?
Yes.
Okay, then you got a remedy. Take them into the small claims court.
Well, now see, okay, you're taking us, all right, but wouldn't it be better just to do the IRS documentation?
Well, yeah, you can do it that way because it's a tax, but you were talking about using it as money.
Right.
Remember, a note is money.
Right.
That's how you do it if you treat it as money. If you're going to do a payment order, then here's what you do. I did this 3 weeks, a month ago. Haven't got a bill since then. Let me show you what I did.
Right now I'm looking for some questions in chat, so if anybody has any questions, would you put them in chat, please?
Okay, notice on this bill, this is my bill. Here's customer account number. That's not my account number. That's their account number. Okay? Everybody see that?
Yep,
Pay attention to what I'm saying. If I'm going too fast, let me know. Okay. Notice here's my estate. They're billing the estate for the tax. Here's the customer account number. I think I've got the wrong one here. Let me get the okay. Mitsubishi publishes practices for attorneys. Mitsubishi. This is a coupon. See where the dotted line is?
Yep.
Okay, that's the coupon. You tear that off of your bill. Separate it from the bill. Notice what I did here. You want me to blow this up?
We may want to, so Eric can see it, but I can read it, or you can read.
Can you read this, Eric?
No, it's too small.
Okay, I'll tell you what it says. Gene typed in there, pay to the order of U.S. Department of Treasury, Stephen
Mnuchin,
Secretary of Treasury, and charge the sum said to account number and the account number of Southern California Edison, and credit the memory of account number to the account number for set off.
That's my Treasury direct account number. So I'm using my Treasury direct account number to do the set off on the public side. This is a receivable. Remember, receivables are what's owed to Edison. Payables are what Edison owes me. Since they use my credit, they owe me the money.
Where do you get your federal account number from?
Post your questions in the chat.
You would need to post the questions in the chat.
Well, I'll answer it. That's my Social Security number, which is a bank account number. That's not a taxpayer identification number. Everybody thinks the Social Security number is a taxpayer identification number. It's a bank account. Can I prove that? You got to be kidding.
So basically, Gene, the account number is your Social Security without the dashes.
Right.
Okay.
I just converted a receivable, which is what's owed to the utility company, into a payable. Did a payment order to the Treasury. Why am I doing a payment order to the Secretary of Treasury? Because he does the bookkeeping. Because this is a tax bill, not a payment bill. This is not a bill for the payment of money. This is a bill for the payment of taxes. Who takes care of taxes? The IRS does, under the U.S. Department of Treasury. Remember, the IRS is under the Department of Treasury. So here is the amount enclosed, $234.85. That's the amount of tax that's owed on my credit that they use. They use my credit. So what did I do?
What did you do, Gene?
I did a 1040V. Here's a payment voucher. 2016, Form 1040V. There's my bank account. There's my name, Gene Blaine Keating. Address, Thousand Oaks. Notice it says 359.73. So I combined my water bill and my electric bill into one, which comes to $359.73. This is the payment voucher. This is just like money.
And so this goes along with the coupon that you tender into
Right.
the Treasury.
Right.
Okay.
Along with the check.
Mm-hmm.
It says the payment voucher because I'm identifying it as a check. What does it say? Amount you are paying by check. What was the check? The coupon. This is the payment voucher for the tax. So I put this along with the coupon as a payment voucher to show I'm making a payment because it's a tax and not money. It's not money, it's taxes.
And I can see up in item number 1, you've got the Social Security number without the dashes again. That's your bank account number at the Treasury.
Right. Exactly.
If anybody has any questions, you can put them in the chat and I can run them by Gene.
There's a few questions in there you might want to cover.
Okay, let's see the difference between...
Gene,
Yes.
yeah, I sent the electric company one time a promissory note and the payment coupon, and they sent them back to me. And the payment coupon has the for deposit only into the bank account.
Okay.
Oh, that they are depositing the coupons even if you do send them a payment, they're getting paid twice, correct?
Right.
Okay.
They're double dipping.
Okay, we have a question in the chat, Gene. It says, Walter asks, difference between non-negotiable and negotiable.
Non-negotiable means it can't be negotiated for payment. They're all non-negotiable. I want you to tell me, why is an instrument non-negotiable? Because of what?
It's
I'm
a
sorry.
security.
Because of what?
It's a security.
No, because there's no money.
Gene, Bill asks, can one ask for the note years later?
Well, the problem is that the courts view it as a waiver. You're waiving your right. What they do is take the note and give it to somebody else.
Someone else asks, how old can a transaction be? It's Jim. How old can the transaction be? I have a car paid off in 2015 and a home foreclosed on in 2011.
You can go back 10, as long as there's OIDs, you can go all the way back, you can go back 10 years. I think they make OIDs only 10 years. I talked to the Complex Issues Committee, and that's what they told me.
Okay, another question. What are the IRS forms used to collect on a taxable termination? From Tom. Or would you rather discuss that in a different class?
Well, they have to pay the tax when they terminate your property. They use a 1099-A or a 1099-C, which is a cancellation or an acquisition, or it's treated as an abandonment. And that's covered in publication 1212.
Okay.
Which I will show you. If nobody raised. Read this right here.
Okay, introduction. This publication has two purposes. Its primary purpose is to help brokers and other middlemen identify publicly offered original issue discount OID debt instruments they may hold as nominees for the true owners. So they can file forms.
So they're acting as the nominee for the true owner is who? Who's who?
It's us.
Who's never claimed it.
Mm-hmm.
Read this.
Where at, Gene? Okay, there we go. Instructions for issuers of OID debt instruments. In general, issuers of publicly offered OID debt instruments must, within 30 days after the issue date, report information about the instruments to the IRS on Form 8281. Information returned for publicly offered original issue discount instruments. In addition, Form 8281 must be filed for a debt instrument that is part of an issue, the offering of which is registered with the Securities and Exchange Commission after the issue date of the debt instrument, and such registration occurs on or after January 1st, 2014.
Okay, now remember what that says. The issuer.
Jimmy, can you check the questions in the chat, please?
Yep. Here's one from Eric. I think he's asking if we can use the payment coupons to pay other people's bills.
No, you have to use it to pay yours
Okay.
because it's attached to your account.
And then Kristen asked, do we have to have a coupon to pay the bill, or can it be a letter with the amount on it?
Well, it's better to have the coupon. Okay, who has to file this? See where it says who has to file the following?
Yes? You want me to read that? Oh.
What does that say right there? It's C.
A court or court administrative office.
So when the court does a taxable termination under 2612 and 2613 of Title 26, they have to file a 1099-C showing a debt cancellation.
Jean, we have another question. Zach asked, who do you send it to? But it goes to the U.S. Treasury, the way that you, the way that you filled out that coupon.
Right. He does the bookkeeping. I do the ass kicking.
And Cecil asked, does he have the amount written in, which you had the amount of 2 bills written in, combined in that one, last example.
Well, the amount was on the bill.
Right.
All I did was endorse it for payment. I converted it into a money order.
Guys, and see who's this? Zach
I didn't deposit it into a bank. I gave it to the Treasury, the Secretary of Treasury. Why?
Okay,
because it's a tax bill. It's not a payment bill. It's a tax bill. Why is it a tax bill? Because there's no money. There hasn't been any money since 33. Remember what happened June 5th, 1933?
They took us off the gold standard? Took all our gold and silver away?
No.
What?
We were never on the gold standard. Gold and silver was the money. It wasn't a standard.
Okay.
Title 12, Section 1.
Title 12.
HJ 192.
Title 12, Section 152 says the lawful money of the United States shall be construed to be gold and silver coin. It says Sections 411 and 412 of Title 12 says that Federal Reserve notes are redeemable for lawful money at any Treasury Department office or any Federal Reserve bank. Never been repealed. Title 12, Section 152 has been repealed, but 411 and 412 have not. So you never get paid.
We have another question in here. Zach wants to know, do we need to have set up a Treasury account first?
No. You already have one. Where do you think they're getting all the money from? You silly rabbit.
Okay, and there's a second, like a follow-up question from Jim. Do you need to do anything in advance of sending this out in this manner? And yes, we do send it to the Treasury, Jim.
Yes. I overnight it to him.
But he does ask...
In fact, to include the overnighting, cost of the overnighting in the bill.
Okay.
You can add that to the bill.
And so there's nothing in advance that needs to be done other than endorsing the coupon correctly and doing your 1040V, right?
Right. Okay. Everybody talks about, this is about redemption, not debtor creditor. How can you have a debtor creditor when there's no money?
Right.
And where does it say in the National Bank Act? Here, I'll show you.
Gene, what was the date again that you asked us about a minute ago, Title 12 with the HJR 192?
June 5th, 1933.
1933, okay, 6-5.
48 stats, 112. What was I going to show you? I was going to show you something.
Sorry.
I was going to show you, let's see.
You were talking about the debtor-creditor relationship and that there was no money.
Oh, yeah.
Well, it's no wonder they hide all this information in the manuals that are forbidden for us to look at.
This is the National Bank Act. This has been codified to Title 12, paragraph 24, section 24, paragraph 7. 12 USC, section 24, paragraph 7.
Would you like us to read?
Right there? What does this say right here?
By loaning money on personal security, by obtaining,
Don't say anything. Now this is written June 3rd, 1864. See the date up here? So gold and silver coin, this is still current law today. So the lawful money of the United States is gold and silver, but they never loaned you any.
Can I ask a question for Kristen, Jean?
Yeah.
Okay, so Kristen says, so if we get a bill from the IRS, we would charge to their account Social Security number 123-45-6789, and our account would be 123456789, no dashes.
Right. You charge it to their account. You charge it, that's their account. That's not your account.
And again, the only forms that we need to go with the payment coupon is the 1040V, right?
Right.
Okay,
right.
Zach, that was for Zach's question there. And it's sent in just like we were talking about. Sent to the Department of the Treasury, which is the IRS, the IMF, and all that now, Gene?
Yeah.
Yep. As far as I know, Angel asked, do we need to sign the 1040V anywhere? And that would be no. You just need to sign the presentment.
No place for signature.
Right. Bill wants to know if we can do a year's utility bill tax. I guess total up your annual utility bill and send it in.
Yeah, you could, well, you could pay, yeah, technically you could do that, yeah. I do it as I get each one, I haven't got a bill from them since I did this.
Pastor Pennington asks, can you use an EIN for a business to pay bills?
Yes. I use mine.
Again, we send it to the Treasury. How long does it take for them to credit it to the account, Gene?
About 2 weeks.
Okay.
Now notice that this is right of rescission. That's to certain transactions. This section does not apply to what? Read what that says.
Exempted transactions, reapplication of provisions. This section does not apply to 1. A residential mortgage transaction as defined in section 1602W small 1 of this title.
Well, they don't show it, but well, here, I'll show it to you. Come on. I gotta reduce this down so it's too big.
Okay, can I, may I ask you another question then?
Yeah.
Are you doing that? Okay. Instead of a coupon, since I'm in the eviction process, they are not billing me anymore. What should I send the 1040V with? Do I send the bank a copy of the 1040V?
Yeah, send the originals to the Treasury and then forward copies to the to your utility, whoever your bank or whoever
the
you're
bank.
doing.
Uh-huh.
Yeah.
Eric wants to know what address do we send payment order to?
1500 Southwest Pennsylvania Avenue. Secretary of Treasury.
Yeah, Washington, D.C.
Washington, D.C.
No, Angel, we don't have to set up a Treasury account. We answered that earlier. Can we do this payment on the mortgage?
Yeah, you can use that to pay your mortgage. That's just a tax bill. But they have to pay the tax because they're the ones that borrowed the money.
Okay, I think we got Pastor Penn's question already. We have another question. Can the CCP 1131 and 1134 be used in an open foreclosure case?
Yes. I'm using it in mine.
Okay.
Yeah, see 1602W? Remember it says as a mortgage transaction as defined in 1602W? Read that.
The term dwelling means a residential structure or mobile home which contains 1 to 4 family housing units or individual units of condominiums or cooperatives.
I want to ask you a question. Why are they saying that 1635, the right of rescission, doesn't apply to residential mortgage loans? I bet you that none of you can answer that. first of all, what is 1635? It's TILA, isn't it? Truth in Lending. What is TILA?
That's the Truth in Lending Act, right?
Right.
Reg Z.
Yep. Yep.
Yeah. It deals with credit transactions.
Credit transactions.
What does a mortgage loan deal with credit transactions?
Yeah.
No, because there's no money lended. No, because there's no money. They didn't loan you anything.
They couldn't have loaned. It's not a credit transaction because they never loaned you anything.
But don't they take the well, you're the bank. That's what they're using.
Yeah, you gave them money and you never claimed it, so they took it and sold it to investors.
Okay.
So what's the problem in this country?
Too damn many rules and regulations.
No money.
People don't. Yeah. The problem is nobody reads anything and there's no money.
All of the above. Here's a pretty in-depth question, it looks like from Zach Jean. How do we file an adverse claim under 8-102, 8-105, 8-505, and 8-508 to get back your paid-off mortgage? Is that too in-depth for this class?
No.
Okay. Maybe before we start going down that, is there anything else that we need to cover as far as the set off on bills or anything, Gene, that you wanted to cover tonight?
Yeah, we can cover whatever you want.
We got 30 minutes left. We got 30 minutes left, Gene.
Okay, well, let me see. You want me to go ahead and keep going with these questions then, Brian, or does Gene, you want to cover something else?
What are you going to do? Gene? You want to answer some questions or you want something else?
Well, does everybody understand what's going on?
Well, basically, from what I've gathered, Gene, is that the way that they have everything structured in the financial system, there is no money, and they've got it all twisted to where we don't know or understand that, and we're not behaving and reacting in fashion to act as creditors.
Right.
And you can help us learn how to become responsible creditors.
That's why God made me.
Does anybody else have any questions about that? If not, I'm going to go ahead and read these questions in the chat room.
Notice how this says debt estimates to which this section applies.
Can you blow the screen up a little bit more, Gene, please?
Sure.
Thank you.
You're welcome.
Thank you.
See, they're called debt instruments. Debt instruments are original issue discounts. You notice when you write a check to somebody to discharge the debt or the utility, they never give you the check back. They sell your check to investors.
And Gene, I've been in the bank, been to two of my banks to try to request the checks back, because they used to send them back to you, but none of them do anymore, and you explain that's because they sell them.
The security. Are the evidence of indebtedness?
And because of what we know about the security, they obviously have to bundle those, right? That's what they're bundling and selling. Okay.
They're bundling them and selling them to investors.
Okay.
But they're not evidence of indebtedness. They're securities.
How can we claim them?
B3.
How can we claim them?
How can you claim what?
The checks. If we're writing a check from our bank account and they're selling them off and we're not getting them back, how do we claim them so we get them back?
Well, you do an OID. You do it the Treasury. Do a payment order to the Treasury. Then he does the offset. Then you do the 1040V, but if you're going to get a refund on it, if you want to get a refund, then you have to file a return. And that's what this let's see, zero out your account. This shows you how to do it. If you don't have this, I'll send it out as a handout. Remember, everything is a tax. Taxes supersede contract law because of your Treasury Direct account, your Social Security number. It's a Treasury Direct account. Due to the what? Bankruptcy. Address every issue in court as a tax issue. You're not in law, you're in tax court. There's no money, only taxes. A bill is a money order. So what I do is I convert the bill to a payment order. Is that what I did?
That's what you did.
Yes, you did.
Okay, so they use the federal government, state government, and corporations use your Treasury Direct. Why? Because they're bankrupt.
And that's also because we have
I'm sorry. You have a block grant, they block you from using your credit. So if you want to get a refund, what you do, let me go down here. This has got everything in it, the letters you write and everything. Here's the OID. Tells you how to fill it out. You put your name and address down here as the payor. The bill amount here. Who sent the bill? Then you attach the 1040V. Pay to the United States Treasurer. 1040V attached. Is that what I did?
Yes, it is.
So there's the OID. Then you do the 1096 the same way. You fill out the OID. You put the same information in there. There's your employer identification number, your Social Security number with the dashes. You check this 1099 OID box. I can send this as a handout. This shows you how to fill it out here. And here's the 1040. Shows you how to fill out the 1040.
So Gene, basically what we're looking at tonight is the first payment coupon that you sent in with your 1040V. That's to pay an existing charge from something.
If you want to get a refund, you got to do this.
Okay, and this is for the refunds. Okay.
This is for the refunds. I'm not asking for a refund. I'm asking for a zero the account.
Right. Okay.
Do they have to do it? Sure they do. Why do they have to do it? Because they're all bankrupt.
You ready for a question?
Yes.
Okay. I read this earlier. It says, how do we file an adverse claim under section 8-102, 8105, 8505, and 8508 to get back your paid off mortgage?
Well, you want to file an adverse claim to whoever the investor was. So you have to do a letter. And I haven't asked, is Angel on this call?
Yeah, she's on here, Gene.
Yes, I'm on here. Yes.
You mind if I give you a letter out as a handout? If you don't want me to, I won't do it.
Your personal information.
Huh?
If you can just take some of the, like the name and stuff off of it, or at least the last name or something.
Okay. I can do that. See, what I'm doing is making a claim on the instrument as the entitlement holder with security entitlement. What I'm doing is billing them for the amount. $240,000. $40,640. U.S. units of silver. Notice what I did down here. It says payment in full has been made since 9/16/2005. I'm demanding a receipt for payment as accord and satisfaction. Or under 3, sign a receipt on the instrument for the payment made on 9/16/2 or surrender the instrument. See, I gave them 30 days to do this.
I have another question in the chat. Cecil wants to know, can we do the 1099A and C?
No, you do one or the other. You either do a 1099 acquisition or a 1099C cancellation. If you do the A, you don't have to do the C. If you do the C, you don't have to do the A.
Okay. Angel wants to know, do the 1099 OID form have to be the kind that can be scanned?
You got to have the original OIDs if you file it with the IRS.
And you have to order those, is that right, Gene?
Right. Yeah, I get them in 2 days.
Okay. I think that you can order up to as many as 100 at a time or something like that. Mm-hmm.
Yeah.
Zach wants to know, if they foreclosed on your mortgage 10 to 15 years ago, can I file a 1099 OID to get the money back?
Yeah. Was there an OID then?
That would be something to look up, Zach. See if there was an OID 10 to 15 years ago. We also have another question. 1040V attached to what, since the banks are not billing me anymore? So I guess, Gene, they want to know, what would they attach the 1040V to send into the Treasury?
If you're doing a coupon, you attach it to the coupon. If you're
Okay.
doing it to a statement, then you attach it to the statement, and you send it to the Secretary of the Treasury. I use the coupon because it's a utility bill.
Right. Terry asks, when Gene sent the Edison electric bill in with the voucher, did he send it to Edison or the Treasury? He sent it to the Treasury, Terry.
Yeah.
I think we answered Michelle's question. Let's see. Angel wants to know, do you have to be a secured party to use this process for debt cancellation? And I think you answered that earlier. That was no. Right, Gene?
Yeah, right. You are a creditor. You don't have to do a UCC1 to become a secured party creditor.
Okay. Zach wants to know, can I pay coupon from IRS to my single entity LLC IRS taxpayer?
Right. Yes.
Okay.
Go get him, Zach.
Walter wants to know, how can you find out if a court did an OID and when? A court wouldn't necessarily do an OID, would they, Gene?
Well, find out the taxpayers, and yeah, they're an investment company.
Okay.
Write the IRS. Get their taxpayer identification number. Ask them for their taxpayer identification number.
Okay, and we have another question about the address. Was that 1500 Pennsylvania Avenue, Gene? Okay.
Yeah.
In Washington, D.C.
I'll show you the...
Okay. Eric's asking, did you sign the back in red? I guess he's referring to the coupon, and no, you sign right on the front underneath the
right. I signed it
sentences
on the front.
you add to it.
You sign a check, you sign it on the front, not on the back.
Right.
That means I'm the drawer and the maker.
Bill's got a comment in here, and I'm not quite sure what he means. Well, how does that work with units of silver in Title 12, 1933?
Well, they didn't loan you any money. They can't till they restore gold and silver as money. There's the phone number and the address of the Department of Treasury. Can you see the screen?
Yes.
It's 1500 Pennsylvania Avenue, Northwest, Washington, D.C., 20220. 202-622-2000.
We've got somebody in the chat, JDD, and the question is, how do I adjust the amount correctly for paying mortgage off since the statements are from 2 years ago?
It doesn't make any difference. You still have the mortgage?
Yeah.
Whoever put that question in there, I guess you could speak up and...
She's got it, Gene.
I'm here. It's Janice. Go on, Brian.
No, we spoke to Janice earlier this afternoon, Gene.
Okay.
So what's your question?
So the answer is no, I don't have the mortgage. It was sold and it's at the eviction process at this point.
The reason they're evicting you is you never asked for surrender of the instrument.
I remember you saying that.
So demand surrender of the instrument or receipt for the payment. I bet you've never done that. You haven't ever done that, have you?
No, I didn't know to until now.
Shame on you. I'm going to get a fraternity paddle and pound your hiney.
I promise I learn it now.
You silly rabbit.
Okay, we have another question from Angel. If you are requesting the IRS to do the taxes, do you need the original OID scannable forms? Again, the OID...
The form that they send you is the original form.
Right, it's the red one and it's in triplicate, is that right?
Right. You send a copy to the... in fact, you can use that to pay your bills. You can send a copy to the... But I don't do it because you're not required. You're not getting a refund, so I don't claim anything. I just use it as a payment order.
And that would be how it would work for most people once everybody gets back what they've paid for, right, Gene? And they can start just...
Right.
Yeah, exactly. Offsetting their monthly bills.
Right.
Okay. Michelle wants to know, what do we do with our taxes each year?
What do you mean? What do you do with them?
Maybe they want to know how to get them back. Michelle, or you want to open your mic and ask and answer?
Yeah.
Gene?
So are we filling out? I mean, do we file the 1040? I don't know how we would file differently than we usually do.
Well, you're not doing an OID. You're filing a 1040, paying taxes on your wages.
Right. So say you had.
Do you know what a 1040 tax is? Can you see my screen?
Yes.
Okay, let me show you something. Transferable estate. Notice 2001 of Title 26. The tax is hereby imposed on the transfer of the taxable estate of every decedent who is a citizen of the United States. Here's the 1040. It's a tax on farm property. If the executor of the estate of any decedent transfers to a qualified heir, who is a qualified heir? They are. So they have to file, they have to post a bond. (2032A) E11 says they have to post a bond. I don't think that's in here. Let me see.
You want me to try to run through a couple more of these questions real quick before the
Hold on, because I'm still confused.
Okay.
Because I still don't know what we're supposed to do because, I don't know, I'm kind of new, so.
Okay, what is it you want to do?
Okay, so at the end of the year, the average person does the taxes April 15th. Okay, so how are we...
They file a 1040 showing their wages. You're not required to file unless you have over $5 million.
Okay, but then if we don't file, then they send us nasty letters.
Well, did you pay any taxes?
No.
Have you paid any taxes at all?
In the past? Yes.
Have you filed tax returns and paid taxes?
I have filed in the past, yes, if that's what you're asking.
Well, I didn't ask you if you filed. I asked you if you paid any taxes.
Have we paid? Yes, definitely.
Well, file an amended return for a refund. All the money you paid in.
How do we do that?
Filing a 1040A. I would file a 1040A, amended return, claiming all the taxes as a refund.
Wouldn't it be best to write the IRS and ask for a statement of accounting over the years that you paid in?
Yeah. Yeah, ask them for a statement of accounting.
So then once you file the statement of accounting, then you'll know how much you can place on your 1040.
Gene, I have a question. Do we have to have any specific I absolutely forgot the way I was going to ask the question. How do we file our taxes? Is that what this is all about? As a U.S. citizen,
Well,
as
if
a
you're getting a
non-citizen?
refund, you're not required to file.
Okay.
But if you make over $5 million, I don't say, you don't strike me as a person with you probably have more than that in your estate, $3.5 billion on the estate side. Well, you have a tax credit of $5.5 million.
And also, I think what will help a lot of the new people is the booklet that you're going to send out as a handout. That was really helpful for me.
You mean the 0-year account?
Yes, sir.
Okay.
I have another question from Cecil. What happens after filing the 1099-A? What do we expect?
Well, are you doing an acquisition or a cancellation?
Cecil?
Cancellation. Cancellation.
Cancellation, Gene.
Okay, if you do a cancellation, it becomes, it's called forgiveness of indebtedness. There's an actual publication on that. Forgiveness of indebtedness is taxable income to the person who it's forgiven to.
So do we have to file a Form 56 with that as well?
I would, yeah.
And then should
point them as a fiduciary trustee. But they're already acting as trustees. They're all debtors in possession under Chapter 11 reorganization, acting as trustees to the bankrupt estate. They're all bankrupt.
And then we put the amount, is the amount of the note, or is it the amount of the total amount that we paid?
The total amount you paid.
Including the payments and everything.
Right.
And then will they send us something, will they send us confirmation, or is it just magic happens and all of a sudden, or the bank is going to send us something, or how does that work?
Well, you file with the IRS. Yeah, that's to do with the bank.
But how do we know, what do we expect, how do we know that it cleared?
Do you have a mortgage loan?
Yes.
Are you paying on it?
Yes.
Yes.
You should stop paying on it.
Okay.
Tell them you want the instrument back. The loan was paid for at closing.
Okay. And then as far, can we use the 1040B on a home equity line of credit?
Yes.
And just pay off the whole entire thing?
Yeah, pay off the entire thing. If you still have a mortgage, you should pay it off. Send the Secretary of Treasury a payment order.
with the, you're talking about the 1040B?
Yeah, payment voucher.
Okay.
You get coupons each month?
And
Yes.
the file income tax, 1040.
Well, give a coupon to the Secretary of Treasury for the amount of the payment.
And
At the
Cecil
end of the
was,
year, you can file for a refund.
was that your question on entire credit card bill with 1040V, Cecil?
Yes, ma'am.
Okay, thank you.
Thank you.
Walter wants to know, we might have to ask Walter what he means. How can you find out if there was an OID? Is this the one for the judge, Walter? The court?
Well,
Okay.
there's when you say if there was an OID in regard to what?
I don't know. It just says, how can you find out if there was an OID?
Yes, this was about the this was about the court.
Okay, thank
now
you.
I do have a.
That's their taxpayer identification number instead of a W-9. Get their taxpayer identification number, then report it to the IRS.
I have one other question, and I think we're out of time, right, Brian?
Yeah, yes, we are.
Okay. There's one more question in here, Gene, that says, and I'm sorry for the questions we didn't get to, do we need to file UCC1 in order to make this magic work?
No.
Okay.
No, 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 no. No.
All right. Is that it? Or you want me to keep
That's
it, Brian?
That's it, Pookie Bear.
That's it.
All right, Gene, I guess that's a wrap then. Thank you, gentlemen. Thanks, everybody.
Gentlemen, thank you. And I've forgotten your name. I'm sorry, who's been moderating here as well.
No, it's Virginia.
Thank you, Virginia. Just a reminder, that letter that needs to be redacted as far as taking Angel's information out of it so that I can learn from it and then send it off to the bank to demand the note, quote unquote. Because I don't know if that's in the handout.
I'll make it available. I'll redact her name and information and send it out.
Yep. So we have the it's just 2 or 3 handouts tonight, Gene.
Yes.
Okay. Perfect.
Thank you, everyone.
Awesome call.
Okay, I'm going to close.
Okay, we'll let you.
Good night.
Thank you. I thank you, dear memories. I forgive you, dear memories. I trust you, dear memories. I love you all. I thank you for your continued support. We'll see you all next Friday.
Awesome. Good night, everybody.
Good night, all.
Thank
you.
Good night, everybody.
Good night.
Good night.